Today, let's take a deep dive into SoFi's latest performance, analyzing the major factors behind the drastic market movement and what it means for investors moving forward. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. The stock saw a steep decline of 7.3%, marking an intense trading session. The price fluctuated between a low of 12.41 and a high of 13.25, with a significant trading volume of 49.02 million shares, compared to the average of 47.53 million. Although there was a slight recovery in after-hours trading, largely due to Broadcom's strong earnings report, many stocks remain in a state of hesitation, awaiting a more decisive market direction. Typically, such positive after-hours performance might signal a broader market rally, but upcoming economic reports are creating an air of uncertainty. Tomorrow's data release is expected to bring some crucial insights, and investors are treading carefully, anticipating the impact of new information. The market sentiment today was driven by several key factors. Initially, news from China, particularly concerning Alibaba, triggered widespread apprehension. This rekindled concerns from past market turbulence linked to regulatory pressures on major Chinese firms. Following that, domestic economic indicators added to the negative outlook. The report on job cuts showed figures far worse than expected, with 172,000 job losses reported against the anticipated 56,000. Additionally, trade data regarding exports and imports continued to be a sensitive subject. Despite the initial market drop due to these factors, there was a shift in sentiment later in the day. Investors began to see a potential silver lining, with expectations growing for an earlier-than-expected rate cut, possibly as soon as April. Previously, such adjustments were anticipated for the third quarter, but now market speculation is pushing the timeline forward. Of course, this remains uncertain until the Federal Reserve makes an official statement. One of the major elements affecting today's trading was geopolitical tensions. Concerns regarding Russia's actions and speculation about broader conflicts have left investors on edge. The fear of escalation into a larger global crisis added volatility to the market. If that wasn't enough, another key factor that impacted trading was the continuous uncertainty surrounding tariffs. Tariff-related discussions have dominated market sentiment this week, with new developments every single day. Initially, concerns about new tariffs caused anxiety on Monday, followed by a more optimistic outlook on Tuesday. However, the situation remained fluid, with further uncertainty persisting through Wednesday and Thursday. Notably, Mexican tariffs were postponed until April 2nd, adding to the erratic nature of the market's reaction. Interestingly, despite SoFi's sharp decline, there were no major company-specific news releases today. No new SEC filings, press announcements, or corporate updates were issued. This suggests that the stock's movement was largely a reflection of broader market conditions rather than any direct action by SoFi itself. Short sellers did increase their positions slightly, with an additional 187,000 shares being shorted. This brings the short interest to 12.34% of the company's free float, translating to 132.94 million shares being shorted overall. However, borrowing costs for short sellers remained positive, indicating that the pressure from shorting activity was not the primary driver behind today's decline. Institutional investors and large funds did not appear to step in aggressively to buy the dip. Most of the day's volume was generated through algorithmic trading, which was not limited to SoFi, but was evident across many stocks in the broader market. Transactions over $100,000 showed a pattern of early selling pressure, with a notable large purchase of 14.9 million shares near the end of the session. Dark pool trading activity was slightly elevated, often linked to short selling and other institutional strategies. However, there was no major shift indicating heavy shorting beyond what was previously observed. On the options front, trading volume saw a notable increase. A total of $24.5 million in options premiums were exchanged today, compared to $16 million the previous day and $62 million earlier in the week. This rise in activity could indicate a potential recovery in the coming sessions. Specifically, call options dominated the activity, accounting for $14 million, while put options totaled $10 million. Overall, 45% of the options trades lean towards a bullish stance. Among the various stocks tracked throughout the day, SoFi was one of the few that exhibited a positive sentiment in options trading despite the overall market downturn. Analyzing the open interest data, call buyers seemed to anticipate a rebound towards the $14 mark, whereas bearish traders were targeting a drop below $12. Notably, a smaller segment of traders even bet on a decline below $10, suggesting extreme bearishness among certain investors. Given that today is Thursday, the open interest levels indicate that SoFi's current price does not align with any significant option barriers, reducing the likelihood of manipulation in the near term. For next week's expiration, no major price walls appear to be forming, meaning organic price movement is more likely. Technically, SoFi stock is currently trapped in a range between key moving averages. It remains below both the 10-day and 200-day moving averages, with the latter sitting at $10.75. Critical support is at $11.31, while resistance stands at $12.72. If SoFi can push past this resistance level, it could signal further upside momentum. However, much of this will depend on tomorrow's employment data. The forecasted unemployment rate is 4%, and non-farm payroll data is expected to show an increase of 150,000 jobs. These figures will likely play a significant role in shaping market direction. As of today, no new analyst ratings or revisions were reported for SoFi. Reviewing its recent performance, the stock has declined 15.71% over the past 5 days and 16.7% over the past month. This sharp decline has undoubtedly created opportunities for long-term investors looking to enter at a discount. Many who were previously waiting for lower prices now have the chance to buy at significantly reduced levels. Personally, I did not make any new trades in SoFi today. However, I have been actively trading options over the past week. My previous buys were around $12.80, which I am comfortable with given the current market conditions. The broader question remains, is there more downside ahead, or have we reached a bottom? What are your thoughts on the ongoing tariff discussions? The situation seems to change almost daily, creating frustration among investors. Additionally, speculation continues about potential geopolitical escalations. Will we see further market disruptions? Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.